Welcome back, everyone. I got a special surprise for you. Shamao paid us a visit. You know what that means? That means that this is going to be a special video. And boy, have I got the goods for you. So yeah, today is the HIMS earnings prediction video. This is my first earnings prediction video. And you know what? I think it's going to go well. You let me know. So yeah, we're going to dig into it. And I can tell you one thing. This is going to be exciting. Good or bad, things are good. Things are happening. Things are happening. So let's dig into it. So what's going on with HIMS? On Friday, HIMS skyrocketed almost 13%. 13%. Okay, so why did it skyrocket 13%? I think it's because people are expecting a beat. There's whispers going around Wall Street. HIMS, I think, is going to beat expectations. Now the question is, what are my expectations for HIMS? Better question, what are your expectations for HIMS? Let me know in the comments below. But yeah, dig into it. There is one thing that HIMS is known for on their earnings tomorrow, Monday. Big Monday. It's like Christmas. You know the great thing about investing is we get 4 Christmases every single year. Earnings season. And it lasts 2 weeks. It lasts for a while. It's fantastic. That's why it's great to be an investor. Okay, so yeah, here's the other thing is HIMS is known to either gap up. They're either going to gap down. It's going to either crash 15% on earnings day, or it's going to gap up 15% on earnings day. Look at Shema. She's really capping out now. But yeah, it's the only thing guaranteed is excitement. We're going up huge or we're going down huge. Now, the one catalyst for going up huge is the short interest in HIMS. And just look at this. 33% short interest. 60 million shares of HIMS are shorted. And there's going to be a squeeze. These people are going to be squeezed out of the market because here's the thing. Why would anybody short a growth stock growing like HIMS has been growing? That's been growing the top line and the bottom line just as much as HIMS. It's kind of, they're playing with fire. It's very risky, and I don't think it's going to work out for them. Let's go further. By the way, Shama, here and there, you see her twice now, says to like and subscribe. Oh, and by the way, if you want to see my HIMS price model, check out my Patreon. It's only $1. You'll know exactly what I think HIMS is worth today. And I'll just give you a hint. It's significantly undervalued. So check it out. And yeah, you'll figure out exactly how much I think HIMS is worth today. Now, what's ado about HIMS? What separates HIMS from the competition is they're building a moat. And their moat really revolves around a couple things. Number one is advertising. By the way, I try to make each of my videos different. So each video on HIMS is going to have something new for you. So check them all out. They will all have something new. But yeah, HIMS is promising to have great sex, tackle anxiety, regrow hair, have longer sex, which might be an issue for some of you. For me, I have the opposite issue. Lose weight and get smooth skin. So anyway, let's dig into it, really. Shall we? Let's dig into it. So what's going on with HIMS? Well, what we're going to do is we're going to look at their brief history, and then we're going to predict what the current numbers are. Now, what I'm going to do is I'm going to actually do the gap earnings for HIMS. Why? Because they do a lot of share-based compensation, and what matters to us as investors is gap earnings. That's how much money comes to us, really. In the end result, that's how much money we make off of the company. Non-gap earnings are funny money. It's funny money. So what I'm interested in is gap earnings. And Shama turned around. She's cleaning. She says, screw you guys, I'm cleaning. All right, so what's going on here is HIMS has been growing and the growth has been accelerating. See, for a company where HIMS is at, to have growth accelerating is a rarity. It's very rare. I mean, unless you're NVIDIA. What company with greater than 40% growth has growth accelerating other than NVIDIA? There's a couple of companies, Hood comes to mind, but it's pretty rare. It's pretty rare, especially when it grows to 95%. Look at this. We got 46% in the first quarter, 52% growth in the second quarter, 77% growth in the third quarter, 95% growth in the fourth quarter of last year. So that means that this year must be pretty good, right? First quarter. Yeah, I'll tell you what, it's a difficult number to predict because it's been growing so fast. So we'll get into that just 1 second. Oh, by the way, one more thing. HIMS is sort of in the Goldilocks era in their stock market history because they're kind of in between two segments. They're in between being a small business and a medium-sized business, a mid-sized business. So in the be in the Russell 2000 indexes and the mid-sized indexes. So the hedge funds have to have sort of double exposure for HIMS, which also helps HIMS shares because there's going to be less shares floating for HIMS. And the less shares that float, the more volatile it will be. And when there's a short, it's going to skyrocket. Now, I think there's going to be a short attack on HIMS. I think the shorts are going to freak out. So yeah, HIMS and hers. I'm just going to go through a couple of recent news items. These were in my other videos, so I'm not going to touch on it too heavily. But yeah, HIMS is going to offer Novo Nordisk on their platform for $600 per month, replacing their generic semaglutide medication that was running $300 per month. So here's the thing. The revenue for GLPs is going to double per subscriber, but they will lose some of their subscribers because, a portion of their subscribers, let's face facts, a portion of people, they're going to look at it, they're going to go, you know what, I'm paying $300 now. Do I want to pay $600? Some of them are going to look at that and go, you know what, I'm going to go jogging. I'm going to hit the gym. I'm going to ride the bike. I'm going to work this weight off. Other people, they're just going to go, you know what, screw it. I'm going to pay the money. I want to get the shot and take the easy route. So some people are going to do that. Some people are going to hit the gym. So yeah, how many are going to be on each side of the equation? We'll have to see. We will have to see. Okay, again, like I said, I want to show new stuff. I don't want to show old stuff. She's too cute. Oh my God. You know what? Give this video a like just for Shamao and a subscribe. Just for Shamao. Because she's so adorable. Okay, so anyway. Enough about her. Okay, so yeah, the thing about HIMS is they have great retention. Now, for GLP-1s, their retention rate after 12 weeks is 70%. This is on their last quarter's slide sheet. This is compared to 42% for the industry. So they have great retention. They have great customer service, and people just love their product, and people love HIMS. That's the thing, is they love HIMS. And they want to stick around as much as they can. The other factor is that revenues are growing substantially, exponentially. Now, the growth in revenue per subscriber can be prescribed to GLPs because, the GLPs are running $300 per month. The revenue per subscriber is going to grow actually exponentially in 2025 because, remember, $300 is growing to $600. So the per subscriber's revenue is going to grow a lot more than the $73 currently. So anyway, aside from that, we got the revenue just growing exponentially and the total revenues of $481 million. So what are my predictions for revenue growth? I'm predicting 100% revenue growth. I have a couple of other pieces of information that I can't show here. They're sort of behind paywalls, so like credit card data usage and other things like that. So my prediction is a 100% growth in revenues to $556 million. So yeah, let's go on. So as a result, okay, the next question is gross margin percent. So you can see gross margins have been declining quarter over quarter over quarter, from 82% to 81% to 79% to 76.81%. Now, with the company growing like HIMS, you might be asking, why is the gross margin declining? And also with the monthly subscriber, the monthly revenue per subscriber increasing to $73, why is the gross margin declining? It's declining because the GLP-1 medications aren't manufactured by HIMS. HIMS does manufacture other stuff. There are 3 facilities, but they do not manufacture GLP-1 medications. GLP-1 medications, up until the end of Q1, was produced by BLP Labs. So the thing is, or BPL Labs, I think they're called. So anyway, regardless, it's a third-party subscriber platform. She's asleep. She's too cute. But yeah, it's a third-party subscriber platform. And since it's third-party, they take a cut. So since they take a cut, the gross margins are declining. However, gross margins are going to stabilize. And as the company grows, the gross margins are going to stay the same or grow as well. And it's going to grow in the future. But for this quarter, I'm predicting gross margins to decline to 75%. That leaves us with a gross profit of $417 million. Now, what else is going on this quarter is that HIMS and HERS, see, we're going on to marketing now. So marketing is the big thing because marketing takes such a huge percentage of the revenue for HIMS. It's very important. Now, what happened in the first quarter? Super Bowl. What happened during the Super Bowl? The HIMS ad. And boy, did it make waves. Actually, the HIMS ad caused HIMS, not just the traffic to spike, 650%. It caused the stock price to explode to $72 per share. And it just recently crawled back to $40. So it went from like $30 to $72. It crashed to $25. Now it's at $40. It's a roller coaster. It's a roller coaster. But anyway, moving on. So what HIMS is doing is they're becoming more efficient. They're more efficiently spending their marketing spend. So that way they could spend less as time goes on as a percentage of revenue. Gross spend will go up, but it's going to grow up less as a percentage of revenue. As you can see here, in Q4 of 23, marketing was 51% of revenue. That's huge. Half of all revenue going to marketing. And they're still profitable. I don't know. I don't know how they do their numbers, but they're profitable. Even spending in the last quarter 46% of their revenue on marketing, and still a nice chunk of profit. So yeah, they're becoming more efficient there. The operations are becoming more efficient. Their general administrative is dropped from 13% of revenue to 10% of revenue. These are last quarter's numbers. I predict that trend to continue. So yeah, the other thing to note is that their subscriber base is also growing substantially and exponentially. But we'll get to that in a second. So I'm predicting marketing at $250 million. Remember, Super Bowl ads are not cheap. I'm predicting operations coming in at $67 million, R&D at $25 million, G&A at $52 million, for total operating expenses of $394 million, operating income of $23.2 million, and that's an operating margin of 4.18%. So it's a gradual trend upwards for operating margin. That's what we expect for HIMS, is the operating margin to gradually increase. And that's what we see here. And that's what I predict, and we'll know tomorrow if this lines up or not. But I think this is fair. Do you think it's fair? So yeah, what else do I have to say here is, not too much. Just the company keeps getting more efficient. All right, so that gives us a net income of $27 million. Okay, the big thing here is taxes. That's what affected Q3 and Q4 of 2024. You can see here, Q3 had a positive tax adjustment of $52 million. And and it had a positive tax adjustment in Q4 of $3.7 million. See, what's going on here is prior to 2024, HIMS was not making money. They were losing a lot of money. And what they did is they accumulate these losses, and then they can use these accumulated losses to offset their taxes for a period of time after they become profitable. And they can sort of pick and choose where to apply these tax savings, on which quarters to apply it. And you'll never know when it happens, if it happens, you can't predict this stuff. Obviously, it happened in Q3, but you can't predict when or how it's going to happen. So I just put a tax rate of $0 for Q1 of 2025. And that's the reason why the percent of revenue for net income is only 4.86%, even though the growth is 143%. So the other thing you'll notice is the revenue growth, I'm predicting 100% growth. I'm predicting net income growth of 143%. And you know what? This actually matches analyst expectations. Analyst expectations are expecting 12 cents of non-GAAP, which I'll go over in just 1 second actually, but I'm cutting ahead. You have to forgive me. But yeah, for adjusted EBITDA, they're expecting, HIMS is expecting 20 to 30% long-term by 2030. And they're expecting gross margin in the mid-70s. Yeah, as you can see here, we're at the mid-70s right now. But anyway, these are long-term. And I've shown you this slide before, so I'm not going to discuss it. So let's finish off this report. I'm predicting a subscriber base of 2.4 million. It may be higher because of the Super Bowl. I'm predicting revenue per subscriber to grow to $75. And I'm predicting GAAP earnings per share of 12 cents. Remember, this is GAAP, so this includes stock-based compensation. Obviously, if you remove stock-based compensation, that number goes up. I'm predicting adjusted EBITDA of $63 million for an adjusted EBITDA margin of 11.32%. And actually, that might be low because remember, long-term, HIMS is expecting 20 to 30% by 2030. So they got 5 years to get to 20 to 30%. I'm projecting only 11.32%. So that actually might be low. So HIMS may beat my numbers, but these are my predictions. And we'll know tomorrow whether these work out or not. By the way, Shama says to like and subscribe. And yeah, if you want to see my price prediction on HIMS and 20 other companies, head on to Patreon. It's only $1. Thank you for watching. Now I'll see you in the next one.